Retiring when gambling seems like a good investment strategy. Bruce, a former medical professional, stuck the landing on his retirement. He saved well, their goal earning a 5 to 6% annual return on their balanced portfolio of stock and bond funds. And yet Bruce hears about things. Friend casual, shouldn't we be investing in marijuana stocks? Hell, ask his financial advisor, Jeff Hybiak, who is based in New Kent, Virginia. What about blockchain? This phenomenon is familiar to investment advisors working with retirees or soon-to-be retirees. A lot of times, yet older investors obsessed with outsized returns may be putting themselves in real danger. Taking on more risk. This is especially true for retirees who may be well off but are not among the super rich. With a bigger invest, when he meets a client who wants to jump into the latest hot tech stock, Joseph Sways, a Walnut Creek, California, financial advisor, typically starts by asking a series of investment-related questions. I say, why? The point of the questioning, he said, is to get them to see what they don't know. More often than not, related video. These people might have cracked the code for retiring young provided by Newsy. Some researchers call the years immediately before and after retirement the fragile decade, because investment returns during this period take on outsized importance. This is partly because the financial planner Ann Minium encourages more conservative investing during the fragile decade and finds that clients often push back, wanting bigger returns. I let them know that, your real appetite for risk, what is it? The truth is, many people think they are more comfortable taking risk than they really are. Then the market swoons. Clients answer several questions about money. For example, Ben Rickey, an advisor in Yakima, Washington, is a fan of Riskalyze. It's very relatable. Once he knows a client's risk tolerance score, Mr. Rickey creates a model investment portfolio based on it, along with some more aggressive portfolios. Then he compares them. Mr. Fonville likes to show his clients a chart with the returns for two portfolios, one with 100% large stocks, and the other a diversified mix of stocks and bonds. Which one would you prefer? Then he shows them a second chart, this time including a 4.5% annual income distribution from both portfolios. Again, hell, even when presented with evidence like that, some people cannot help but gravitate toward riskier investments. What is a financial We call it a sandbox account, said Lorenzo Sanchez, a financial advisor in San Diego. We put no more than. Jeff Hybiak has adopted a similar approach for when clients run to him with exotic investment ideas that he considers unsuitable. He lets them open up. Before he made that investment, Mr. Hybiak ran the numbers to be sure his client could withstand a total loss of his play money and not derail his retirement plans. Even without those, if he makes money, great, Mr. Hybiak said. If he loses it all.
Raindrop, drop top, top smoking, no cooking the hot pot. Fucking on your bitch, yeah, that. Looking up, open the park pot.